Good morning. I guess good afternoon, depending on where you are in the world. For this Sunday edition of the live stream, we are joined by Tyler with Unleashing DePIN. Tyler, how you doing, man?
I'm doing well, Brad. I'm doing well. How are you?
I'm doing all right. Like looking at the markets, it's just like this sideways chop. We finally are like, it's like we're breaking out a little bit and it's just back down. And it's just been in this boring range for a while, man. So it's hard sometimes to just stay locked in, but normally the toughest times to stay locked in is the best time to be locked in my
I know
experience.
it's painful, but the reality is, it seems like a lot of these continual sideways chops they persist or continue for at least like a year, and it feels like we've been in a year where that's been the case. Even though we've had what seems like every catalyst under the sun to be able to push the markets up, but here we are. Here we are.
It's a good point about the catalysts. The things that are lining up right now from regulatory standpoint with the banks. Yesterday, I covered in the live stream, like the IRS just put out the SEC put out a notice on how to self-custody your crypto assets. Like, it's pretty wild, all the stuff that's coming together. It sounds like Clarity Act's going to be pushed into next year, but for people that aren't in the weeds every day, like they wouldn't know all this stuff's taking place.
Right.
But I think the rails are really being set up that if the macro environment turns around going into 2026 and liquidity is restored, I do think there's going to be a lot of people that are very surprised that are sidelined. I don't know what your thoughts are on that, but
yeah, I mean, there was a really good video that obviously you've been talking about the 4-year cycle's dead. There's a stronger case to be made about the correlation to the business cycle. You'd showed one of the videos yesterday on your stream about that guy at Solana Breakpoint, sort of showing the consolidated Bitcoin price against the business cycle movement, and it was damn near perfectly correlated. So Trump's made it pretty clear he wants to lower interest rates. They want to push money into the economy. They want to increase the kind of the business activity, increase GDP, whatever that looks like. And so I think if they can hit those goals, milestones, I know we're going to talk about the Fed a little bit. That'll hopefully be the catalyst that we really need to get this market going. The challenge is, what's the timeline look like? Because obviously there's a lag time between pushing money into the economy and people feeling comfortable to hire, people starting to spend money again, and we'll see how that goes. But I'm cautiously optimistic that they will do whatever it takes. And he's got the midterms to take care of. I know you talk about that quite a bit, so they gotta do what they gotta do. And hopefully, if that happens, they pull it off. We get a new Fed chair, we get the economy going. Crypto is going to be back to where we want it to be.
I agree, man. And the midterms they're one of the biggest points in all of this, because it would be one thing if Trump could, in this first year, I think he's tried to get a lot of the pain out of the way with the tariffs and all that. But the midterms are incredibly important, and if they lose ground, it's going to very much limit what he can do the rest of his presidency. And I would also imagine they're going to move towards impeachment every step of the way if they lose ground there. So I don't think there's a whole lot of time anymore at this point for them to be messing around. And I think it's going to be deregulation, liquidity in markets, and obviously the big topic that you just brought up is, who's the next Fed chair going to be?
Yep.
And this news broke. Really, Hassett was in the lead, right? And then this news broke really late or I guess earlier this week, that all of a sudden this Kevin Warsh is in the running. And you see, I mean, it was not long ago, December 3rd, just 10 days ago, Hassett was at an 85% likelihood, now dropping to 50. It got down to 47, ticking back up a bit. So curious what your thoughts are on this new emerging Kevin Warsh, the two Kevins.
Yeah, well, I call it good Kevin, bad Kevin. I made that joke yesterday on your stream.
Yeah.
I think the way that I'm looking at this is Trump's been parading around Kevin Hassett for a while now. He's clearly been the apparent front runner. Polymarket odds made it seem like that was the case. I feel like this is a bit of a game that Trump's playing because he wants to appear like he's thinking through this. He's not just going to jump to the person that's going to do exactly what he says, even though at the end of the day, we know he's going to pick the person that's going to do what he says. So even though this is a new person in the race, judging by what Trump's been saying and what Kevin Warsh is talking about wanting to do, which is not flood the economy with money, not just drop interest rates to zero, because he knows that that's got long-term ramifications. I don't think, we were talking about this a little bit yesterday, but Trump's, he's got short-term goals, right? All of these politicians try to make decisions that are beneficial to them within their term, and he's only got a little bit longer to go. He needs to win the midterms to be able to set up JD Vance or whomever he's going to push for the next presidency. And I think what's interesting right now is that we've seen all of the economic conditions not support what Trump's looking to say, right? They're not sharing numbers. There's kind of this bifurcated economy between the has and the has-nots. And then additionally, what you're seeing with like the New York mayor or what happened in Miami, there's starting to be this uptick in Democrats that, or even more than just Democrats, like in Miami, full-on socialists winning this. And I think it's becoming more and more apparent that midterm election is not looking as good for the Republicans as Trump probably wants it to. So I don't think he's going to have a choice to just do whatever it takes on the Fed side.
I agree, man. I think we're going to see Hassett ticking back up again. I sent out a tweet this morning when he was at about 50% chance on here because, and I sent out a tweet, I likened it to, Kevin Hassett being more like Helicopter Ben, right? Back when QE began after the financial crisis back in 2008. This whole idea of printing money, keeping rates at zero interest rate policy, and buying debt on out further out on the yield curve to bring those yields down on the 20, 30 year, well, 10 year as well. And I think Kevin Hassett really aligns with that. Now, you can argue while that would be good for crypto in the short term, like you said, I would argue that it's horrible for the longer term, ramifications. And
right,
we've continued to see this where politicians will kick the can, right? Warsh is more like Thomas Hoenig, which back in the day when Helicopter Ben started QE, he was really the only Fed chair that was dissenting every time.
Right.
And he saw that asset bubbles are a problem when you print money and when you have QE, and it becomes a massive issue with inflation, right? So I think Warsh is under his plan based on a report that came out like 2 months ago. And they highlighted his thoughts on this. Yeah, his plan would be to cut back money printing. So he doesn't believe in QE. And he doesn't believe in government spending, and doesn't really think that the Fed lowering rates is the answer. His is a longer term approach, which I don't think Trump has the time for this, because there would be a lot of pain associated with essentially restoring confidence in the U.S. dollar to create demand for our longer term debt, which would bring yields down. I think for the health of the dollar, it's probably the best move, but who's going to do it? And that's the big question. And I don't think anyone has the balls to do it because it would be political suicide, because the short-term pain would be pretty vast.
It's a real situation. Well, I think the other thing too is, they've tried to get inflation down. That's clearly been the primary goal of the Fed over the last year and a half or whatever. And you could argue that they've not been super successful in being able to do that, right? If you look at the CPI or some of these other numbers, we're still in this higher cost denominated world. And so the result of it has been slowed growth. And you really can't have your cake and eat it too. And so I think Trump is probably okay with letting inflation run a little bit more rampant with the the ability to be able to pump money in to get people paid, get businesses going again. Like that's, I imagine that's going to take precedent over the inflation piece. And so if they're able to actually accomplish that, they'll have to figure out the inflation side later. But it's arguably worse to be in this situation where you have both the ISM not looking great, where just the business environment not being as strong as where it needs to be, and prices still being high. So I think Hassett is going to be the clear winner. I think it's going to be good for short-term asset prices. I think there's another argument to be made too, which is that you're right. We are in a position where the long-term ramifications of that money printer getting turned on means less value to the dollar. But with the Genius Act, with the stablecoin issuance, and really trying to effectively ship the dollar all over the world, I wonder if in the back of their mind they're thinking we can keep dollar dominance by having all of these stable coins become increasingly adopted, and so they can offset some of that downside pressure by being able to, again, have their cake and eat it too. So we'll see, but it would be short term. Hassett will definitely make things great for us.
I agree, man. I definitely agree. I think, yeah, look, there's a big problem right now for us in the amount of debt that's coming due. So for a while now, they've been shifting a lot of our debt to short-term debt.
Yep.
And now we're in this situation where we're having to constantly have new buyers of our debt. And to your point, the stablecoin issuers are going to be a big part of that. I think the stance they've taken on stablecoins in general will solidify the U.S. dollar on the global scale, re-solidify it, like you said. But it also creates a buyer, right? They have to buy up T-bills. So it's a regular buyer of our debt. Now, the estimates are that could grow to 2 to 3 trillion in the next few years. We have a bigger problem before that, man. I think there's something like 8 or 9 trillion coming due in the next 12 months. One other change they're making is to the SLR, the supplemental leverage ratio, where the banks are going to be able to hold more treasuries that won't like count against them like it has. That helps, but I don't see there being enough buyers of our debts. I mean, I hope I'm wrong, but that just means that they're going to have to step in. They're going to have to print. They're going to have to buy up some of our debt. And, the whole idea of QE in the past has been printing, keeping interest rates near zero, and buying the longer term duration debt. I think they're going to continue shifting that to shorter term duration, like we've seen. And we're already seeing QE on that end of the spectrum, with the announcement they just made with these RMPs. They're already buying, what is it, like 40 or 50 billion a month in short-term debt is what they announced.
Yeah.
Where do we go from there, though? Because the amount of debt coming that needs to be rolled over is massive, right?
Yeah.
And I don't think they have any choice but to continue the printing if they want to keep yields down, of course.
Right. Well, I think some of that's going to have to shift to your point, the longer duration treasury. Like it's not going to just be all this short-term buying. It's going to have to be the 10-year, the 30-year. And without having that, I don't think they're going to see the impact that they're looking for. But you're right. Like it's right now, the countries that could be considered adversarial to the U.S., they are selling our treasuries, right? And I know you talked about this a little bit yesterday. So I do hope that stablecoins could be a piece to the equation in solving that problem. I mean, Russia made it pretty clear 3-4 months ago that this is part of the U.S.'s strategy to kind of co-opt the ability to actually have our treasury be purchased in an indirect way, because everybody wants these stable coins. So we need to see the uptick on it. And it's good that we've passed the Genius Act, that we can start making that more of a trend in the United States. And because we are a leader in sort of economic trends, hopefully that'll translate to other countries and other just companies throughout the world adopting it, and it'll be a net benefit. But to your point about how much impact, that remains to be seen.
No doubt about it. Here are the bill purchases, by the way, just started 2 days ago. It's funny, man. They went from ending QT on December 1st to buying up our debt, printing and buying again just 12 days later. But Yeah, already over 8 billion on the 12th, 2 days ago. Tomorrow we've got another 6.8 billion, and so on and so forth. So it just continues from there. And I just don't think there's any way to get around that. Before they had the reverse repo market where they'd pulled liquidity out and they'd been pushing $2.5 trillion in from there since 2022, really. That's gone now. So they've got to continue injecting new capital. So it'll be interesting to see how that plays out, man. I agree. I think Hassett is, unless, Trump does crazy things. So you never know. Like there could be a new person that's, put into the fold here. I don't see Warsh though being the guy. I don't think, he aligns with what Trump wants to do right now.
Yeah.
I just don't see it. Hassett right now, it seems like the clear favorite unless somebody new comes in. But other than that, if there's no one else that's under consideration, to me, that at 52% even, I think that's ridiculous odds on Polymarket.
We were talking about this yesterday. It feels like a asymmetric bet to make right now because he clearly, I mean, over and above the fact that he's been kind of the talking head of the next Fed chair for some time now, he just seems to be the most closely aligned with Trump's intentions. And so, I mean, that feels like a pretty easy 2x on that bet there.
It's my thoughts, man. The other big thing, and then I want to talk about Solana, but we're seeing this all over the timeline today. The Japan rate hike. Curious what your thoughts are here. It's something that we've talked about a lot. I've been covering for a while now, and it seems like, X is kind of catching up here to this news. But do you think it's going to be this big sell-off? I mean, a lot of people are pointing out the fact that the last few times they've hiked rates, it's led to Bitcoin dropping 20%. Do you think that's going to happen?
So when I was initially reading all of these comments on X, it's easy to be kind of part of the credulous crowd where you just see it and you're like, okay, this is a problem. You'd called out the fact that this had been sort of already understood by the big players, and so it's probably priced in to some extent. The only caveat I would say to that is that the markets are really jumpy right now, and so it doesn't take much to be able to create a upward or downward catalyst more significantly than I think we've seen in quite some time. And so you've changed my mind a little bit on the impact of it, but I also think that when it does go into effect, there will be maybe a slight overreaction in the markets, and it could have some short-term downward price pressure that's a little bit more significant than has been quote unquote priced in. But if the big players are already seeing this as the likely outcome, like we've seen this even in the last couple of months with some of the decreases that the Fed have shared, right? There's people for the most part expect a 25% rate cut, or a 0.25 basis point cut, and you'll get a temporary increase, and then it seems to just kind of settle down. So I think there may be a negative reaction to it when it does get passed or when it does go into effect, but hopefully it's mostly priced in at this point and we won't see too much of a drawdown.
Yeah, I'm in the same camp, man. I think we saw earlier this year, I think it was like January, we saw a slight unwinding. We also saw this August of last year, back in 2024. The Japan reverse carry trade is something that's been leveraged now since like the 90s, I believe. There's been several unwindings of it. Now, this time's a little bit different, I think, because it's not like we were just caught off guard. Like this is from weeks ago, and I covered this on a live stream where the Bank of Japan was intentionally dropping signals weeks ago to ensure that it wouldn't surprise markets in case it decides to hike rates. And right around the time these reports were coming out, we did see a pretty significant sell-off across markets, including the stock market. Back at this point, it was a little bit over half of the people on the Reuters poll, economists expected this rate hike. We're up to now, 98.3%. So you have to think, like, if you're in that reverse, carry trade, if you're going to have to sell off your equities, you're not going to want to be the last one to do it.
Yeah.
You know what I mean? Like, you're going to try to get ahead of it. Now, that's, all that said, I agree. I think, there could still be a little bit of a sell-off still. I don't think it's going to be as bad as a lot of people are saying compared to some of the prior times, because people are caught off guard more. And there's also, like, if you're investing in equities is one thing, you can sell off those equities and exit that pretty quickly. People have been using this for decades to the point where they have like real estate tied up in this. And like, there's certain assets you can't just like exit that trade very easily. But I do think it's been a little bit overblown based on the X timeline. And I'm learning this more and more. You've got to be able to critically think. And a lot of people are losing their critical thinking ability, where if you're paying attention to the news, a lot of this stuff is baked in by the time the broader X community knows what's happening. The smart money is already pre-positioned in a lot of cases.
Right. That is so true. And you're seeing it more and more. Like I've appreciated the fact that you've been calling out all these bigger accounts that'll post things that are either A, blatantly false, or B, things that have been in the news for, months at a time, and they'll push it as if it's this new news that's going to completely just shock markets. But the reality is this is either it's A, BS, or B, already been part of the news cycle. And so there's it is frustrating because there's enough big accounts that have enough people listening, and it's almost like you can talk yourself into thinking all this is right, and it's got this downward effect that just continues to proclamate throughout the retail investors that have enough power where they can create problems. But to your point, it's already mostly priced in by smart money.
Yeah, man. And about those posts, like, I wonder how much of the responses today are AI slop. I wonder what percentage on X right now, because I see a lot of it. And I see a lot of these. Yeah, I see a lot of these accounts that are like, have huge followings that are just putting out blatantly false information or regurgitating news from months ago. Like, I saw one talking about, oh, Trump is going to allow, crypto to be in 401ks. I'm like, dude, that, like, even the screenshot you have in your post was from August.
Right.
It's like, that's lazy, bro. So yeah, I've been calling some of that stuff out just because I think it's important. I don't know how many people see my responses, but at the same time, it's crazy some of the stuff you see out there right now. One of the things I want to bring up and have you talk about, because you're a bit more technical than I am. I want to talk about this Fire Dancer going to mainnet now. And it's been something that's been worked on for a number of years, but it's a massive update for Solana, and just love for you to talk about what the implications could be from this.
Yeah, I mean, I think it's a big upgrade for the Solana community, for the Solana network. So just a little bit about the historical context. So right now there's sort of two primary clients that are used by Solana validators. FireDancer is one that the Solana core dev community has been working on for, I think, 3 years now. It's been in testnet, if you will, for about a year. The thing that's really interesting about it is, like in traditional software, you've got monolithic services in a microservice environment, where in a microservice environment, everything is sort of, it operates independently. And so the FireDancer architecture is more akin to like a microservices architecture than a monolithic. And so the result is you create less of a centralization risk. But the real benefit here is that because so many of the functions are running in parallel, you're able to actually create quite a bit more scalability. And so they're saying this could unlock up to 1 million transactions per second, which is quite large. We'll see how that actually plays out. But it's interesting because it'll create another kind of client environment that the Solana validators can run. And ideally, it'll create quite a bit more TPS on the network, which in Solana world, that is really the core value proposition that they're competing on. So I'm excited to see where this goes. I don't know how much what the split currently is on the validator adoption, but if you see more and more validators kind of running the FireDancer version, then it could be a big win for Solana. There's another, I think I sent it to you too, that there's another challenge right now, which is that the Solana validators in particular are not very profitable. And so I don't know how much this is going to impact the profitability of it, but I think the current metric is to, you need to have what is it, 160, is it either 1,000 or just 160 sold? I think it's 160,000. So it's like $22 million at current prices to be able to run a validator, and they're just not making enough money. So what this looks like in terms of increasing the revenue potential for Solana validators is a completely separate conversation. But getting the adoption, getting this actually into the network is going to be a really large opportunity for Solana.
Yeah, that was my main takeaway. I've read through several of these articles. I haven't read this one. This is the one you sent me, so I'll have to read through this one and get the details here. But the other one you sent, I do want to play that video because they talk about the challenges right now from the validator nodes. So I found that pretty fascinating, and I'm curious. Like, they're going to have to come up with a solution. Yeah. What that solution looks like, I don't know. I think this is the video right here. Right, this is the one you sent. Yeah.
And what, in your view, is the biggest factor that is making it difficult for small independent validators right now?
Oh, simple. And I got armed with all the numbers and facts here. 160,000 Solana is what is needed to break even now as a 0% commission validator. What is that? 20 something million? 10 or 10.
Yeah.
I think it's like $20 million. When we get calculus tricks. This is a professional operation. We're gonna
check the numbers.
Check the numbers. But what's Sol at today?
I'm gonna get 140. It's 22.4 million.
Yeah, guys, that's
1 million.
Not exactly chump change. Not a garage obvious operation or even close to it, right? So now anyone that's under that threshold, they are basically operating for the love of the game.
Yeah.
And when you're getting, pings on your pager at 3 a.m. when the RPC goes down and you got to help reset it, and then there's network resets and there's updates. It's like now they're doing it at a loss. Like, are you kidding me?
And you've got delegators knocking on your door saying,
yeah,
oh man, fix the books are out.
Yeah, and at the same time, you're watching like the entire ecosystem now be like not kissing up to, but it's like institution. They're sitting here suffering like why am I doing this to myself? Like, I understand it, but it's worth it. And it's gonna be worth it in the end. It's just the problem had to be, echoed more.
I feel like you're the perfect person to ask this to, because it's
interesting. So it'll be interesting to see what they do as a solution. I imagine they'll get it figured out.
Yeah, they have to, right? Because there's just no way that it's currently sustainable. And the other problem is, they talked about delegators. The challenge is that to make it potentially profitable, you create additional centralization risk because you have more and more delegators staking to individual validators that are running on the network. And it's kind of like Bitcoin pooled mining, right? You've seen 3 players that effectively have the majority of the hash rate. And so unless you can create a solution to ensure additional decentralization there, over and above the fact that there's not a lot of economic incentive to continue participating, you've got the other side is now you've just created more and more centralization within the network.
Man, it's always something. But I have to say that the inroads they are making, he said it there with the institutions, hate it or love it, I think there's going to be a lot of usage on the network because of that. And I believe DePIN is like, I think a good niche for them to hang their hat on. And there's a lot of building taking place. But I don't think the amount of volume over the network is going to be anywhere near what the institutional adoption is going to be for them.
Right. Well, and the other point I think that underscores the entire history of Solana is that they are playing to win. Like, they're very competitive, and they have, it's a top priority to ensure that the Solana network is the dominant player. So this isn't like Ethereum where they're just going to take their sweet time and maybe not focus on actually addressing the competitive nature of the network. And so if anything, if we've learned anything historically, Solana is not going to take this lying down. They're going to do what it takes to make the network competitive, make it worthwhile for these validators. And so I think it'll be a problem that gets solved. It's just how that materializes is the billion-dollar question, trillion-dollar question in Solana's case.
Let me ask you this. So I'll put you on the spot here. Arthur Hayes recently made a statement that he believes Ethereum and Solana will be the last two standing. and that the layer ones are just going to have a mass exodus, and a lot of them are going to just fail, basically. And Ethereum, like, I guess Ethereum ecosystem, so you can include Base in there and the other layer twos. But I'm curious, do you think that's right, or do you think, or what are your thoughts, I guess, on Ethereum versus Solana as well?
Yeah, I mean, I have the opinion that a lot of these L1 efforts are going to prove to be a waste of time outside of kind of the ones that have already won. I've listened to so many different opinions and thoughts on it. You have people like Haseeb from Dragonfly who are very of the mindset that we need competition. We need all these different L1s to come, because even if they only have a 1% chance of creating the next Ethereum, it's going to be worth it. But I think at the same time, what you're seeing, and there's another video that I can send you after the fact that maybe you can cover in a different stream, but the playbook by so many of these different L1s is effectively you airdrop all this money to farmers to try to get them on the chain. You effectively create these Me Too products so that you've got parity between, you know, the DeFi applications or the different services that are running on these networks. And then you basically pray to God that people will stick around so that they'll continue to run it. But what you effectively create is just mercenary capital. So you've got people that go there to be able to extract the value that you're giving away. And because there's really no core differentiation, unless you can build sufficient network effect, there's no incentive to want to stay. And so where Solana has basically been able to capture their stake in the ground was when Ethereum was dealing with scalability challenges. They were really the only game in town that had sufficient network effect. They were investing in what was not a Me Too product. They were actually able to create something that had a differentiation that was valuable to developers or just companies in general that wanted to build. And so they were able to carve out that organic, somewhat inorganic, but mostly over time, organic network effect. And I think it's really hard to compete against that. I don't have any exposure to other L1s like Sui or, even Monad just launched. Because I think I don't want to say it's a zero-sum game, but there's no additional incentive outside of the short-term free money that these networks will throw at you to want to stay. The one additional network I would put in there that I think has a chance of doing something in the long term is Avalanche, because their approach is different. Obviously, the EVM compatibility is nice, but being more of a L1 of L1s, being able to spin up your own chain does create a differentiator in the market that you don't have with these other networks. I think the long tail of L2s is going to be a challenging thing to build and sustain. There's been a couple of networks that have done it, but I don't know how long term they stay super viable, because you're competing on a commodity, and block space at this point is effectively a commodity. And some people will differ in that opinion, but I don't know how they're gonna stay. So I would put Avalanche in that third category of someone that is going to be able to stick around, because I do think what they have is differentiated, novel, and there's clearly an organic network that's been built there. I also think if you look at some of the potential institutional opportunities around tokenizing assets through the stock market, like the SEC's clearly been making inroads for that to be the potential in the future. I think Avalanche has as good a shot as Solana of actually being able to provide that. You've got differentiating opinions, like you've got Tom Lee, who says, well, Wall Street doesn't care about speed, they care about reliability and the decentralization. I think that's half true. I think that the other piece is speed is very important to Wall Street. If you look at just high frequency trading, how much of that drives the market, you can't do that on Ethereum. You might be able to do that on Solana with some of these upgrades, maybe on Avalanche, but I would disagree with that standpoint. So that's why I think those two networks have a good shot at capturing kind of the Web 2 financial markets that Ethereum sure as hell not going to be able to solve, and it's not going to run on a Ethereum L2, in my opinion.
Yeah, no, Tom Lee might have a few billion reasons to feel that way.
Yeah.
Oh man,
he only has 3% of the supply of Ethereum, right?
Yeah, it might even be more at this point. I'm not sure.
It's huge.
I think their goal is to get to 5. I want to say, and they've been buying the dip, man. You can actually see like the Arkham, I think you can track their purchases, and they've definitely been buying the dip. I also saw, interestingly, there's a huge whale that's moved over $150 million over the last month from Bitcoin into Ethereum. So that's interesting. But yeah, I agree. I think Avalanche, they've had some huge announcements this last year. So I think you're right with the differentiation and being able to launch your own chain. As far as Ethereum goes, like I all it took for me was in the last market cycle paying $60 gas fees at times to not want to use Ethereum.
Yeah.
I think Base, I used Polygon a bit in the past, but in my opinion, like it seems like Polygon's just losing traction, man. Like I don't think it's just my opinion. I think a lot of people feel that way. And we've seen a lot of projects abandon Polygon. And to me, the only layer 2 I'm interested in really is Base. And I think they have the institutional connections. They have Brian Armstrong. And I just think I think they're gonna do big things. And Solana is the other big one where I think a lot of the building's taking place. And that's where you have to look where the activity is. The last market cycle, to your point, is like very inorganic. You would see the TVL would just skyrocket on one chain, and then you'd see the days that would follow, you'd see the massive, move up in the price. And then that TVL would just move to the next chain, It's just kind of this rotation of capital that wasn't sustainable.
Yeah.
It wasn't because there's building taking place. It was just complete speculation on, which L1 would be the next, and really just a rotation of money in general, just to try to get ahead of the next alpha, if you will.
Right. So I was really optimistic last year. One of the key points in the Messari and the EV3 kind of state of DePIN report was that we saw a bit of the chain wars. And so you had a lot of projects that were building on Polygon, to your point, that were moving to Base. And so it was kind of this conversation, or this question, is who's going to win. And there were a lot of projects in the DePIN space that went over to Base. You've got Demo there. You've got a handful of others that are quite significant. But Solana has really made DePIN a core focus on the within the Solana ecosystem, the Solana community. And so even though I agree, I think Base is going to be the clear winner within the Ethereum L2 space, at least as it relates to DePIN. If I was a builder today, I don't know why you would look anywhere other than Solana. And the irony is that like 3 years ago, I hated Solana. Like I was such a Solana bear. But they've done the right things, and they've prioritized the right segments of the market. And DePIN has been one of them. There's another video that I shared with you, Kyle Samani, saying that they can increase shareholder value by looking at some of these DePIN networks as a way to be able to do that and accrue additional upside for them. So, but yeah, Polygon is one I've never been a big fan of. Obviously, they've got Polymarket, but you're even hearing Polymarket saying, yeah, we can look elsewhere. And the irony of all of this is the founder of Polygon has basically called out the fact that Ethereum has given very little support. They just don't seem to care. There has been a new upgrade on the Ethereum network, though, that's driven transaction costs down quite significantly. I think we're at some of the lowest in history on Ethereum, which is helpful. But without some of the other speed assurances, without some of the just the foundation prioritizing growth in these new verticals and sectors, I don't see how that remains competitive long term.
Yeah. No, I agree, and I do think so far the clear winner has been Solana for DePIN.
Yeah,
and we're seeing more projects move over there. I mean, GeoNet just made that transition. Helium obviously was on its own chain that they moved to Solana, but you also have Auki's on Base. I think what we'll see is a lot of them are probably going to segment liquidity across both, because they did create a pretty seamless bridge between Solana and Base. And I think, in talking to a lot of these project founders, one of the more interesting things is, the reasons for why they're making these moves to certain chains.
Yeah.
And talking like Mike Horton's a good example of this with GeoNet. And he's like, listen, he was very against centralized exchange listings for a while. I mean, he's like, full decentralization. I think he's come around to the fact that like if you want your token to be fully successful, you got to realize that, yes, some of us are willing to deal with DEXs, but a lot of people, especially new money coming into the space, they don't want to deal with that shit, man. They want to have easy access to your token. And if you want to get listed on some of these bigger exchanges, unless you want to pay an arm and a leg and give a huge percentage of your token supply to these exchanges, you've got to have enough token holders. You've got to have enough, transactions, and you got to have some leverage in these conversations. And the other aspect is like, where's the liquidity at?
Right.
The liquidity is on Solana, right? I mean, you're seeing, Demo, you mentioned, they're another one that left Polygon. They went to Base for their own set of reasons, but I think liquidity is a big factor too. Solana is also giving a lot of support with their foundation, man. Like you're seeing a lot, like the Seeker phone is a great example of that, where they're integrated with GeoNet's network, into their hardware.
Right.
So I just think they're doing the right things to attract the projects in. And I believe it's a two-way street. I went back and forth on this a little bit. There for a while, I thought, okay, DePIN needs Solana more than Solana needs DePIN. And a couple of project founders I've talked to, they're like, hey, I think it's a two-way street here, because if they want to be taken seriously on the institutional side of things, they don't want to be known as, pump.fun, degen chain. They want to be able to leverage the fact that they're adding real world value. And I think that's a thing that they're working with the Solana Foundation on trying to work with Binance, because it's a whole nother discussion. But if you want to get access to the Asian market capital, Binance is really the way to do it. And I don't think it's any secret, Binance has not been listing DePIN projects now for some time, since the Helium fallout that they experienced there. And I think that's the next big thing that a lot of these DePIN projects are working on, is trying to get on Binance.
Binance is going to be a big unlock. You're right. Liquidity drives markets, right? And as much as people want to discount the importance of that and just say, hey, it should all be fundamentals based, that's not the reality. You and I have talked quite a bit about this, and especially in DePIN tokenomics generally, where you've got this structural imbalance by forced selling as a function of all of these supplier rewards. You do need access to liquidity. Two other points that I think were kind of interesting as it relates to Solana that came out of Breakpoint. One of the speakers that came on stage said, if you're a project that's looking to get your first 10,000 customers, you want to be able to, have someone to dog food this. Solana with the Seeker phone is your easiest entrance, because you've got these device holders that are interested. And I saw kind of the guy who's in charge of the Solana mobile initiative, just generally saying that the average apps downloaded is 1 per day, compared to the iPhone, which I think is one every 30 days. So you've got a customer base that's highly receptive to crypto. They're actually interested in trying these new applications. So if you're a builder and you say, I want to get my first, again, 10,000 users to be able to test the project, kind of get that product market fit, the Seeker's a great way to get that introduction. The other thing that was interesting that came out of Breakpoint was that Coinbase is now going to have direct access to all the tokens on Solana. So in terms of increasing the liquidity or increasing the adoption, you've got a lot of people that are on centralized exchanges. They don't manage Phantom wallets and all these other things. And so that creates a very clear competitive opportunity for additional liquidity that you get from a SEX directly through being a Solana-based token. So I think those are reasons why, if you are a founder, the Solana ecosystem is pretty darn compelling today.
I agree. I want some clarification on that with Coinbase, though. I mean, are they saying, and because I looked into this a little bit, are they saying that all Solana tokens will be on the centralized exchange, or is it through the Coinbase wallet through their DEX?
My understanding was that it was going to be through Coinbase directly, but that could have been Coinbase wallet through the DEXs. Either way, it would be through DEXs that you're getting exposure to. They didn't clarify if it was Coinbase, like the actual exchange or the Coinbase wallet. But I think either way, it's a big opportunity because even the Coinbase wallet ecosystem is quite significant. So you're able to just have you have access to buyers that we're currently not going to be participating if they weren't a Phantom user or whatever.
Agreed. Yeah, I think it's absolutely huge. And then you saw that what was it? Kalshi is directly integrated into Phantom now. So Solana's making the right moves, man. They are continuing to forge ahead. What are your thoughts on Silencio and now IONET talking about changing up their reward system? So for people watching, Silencio recently announced that you can actually get paid on stable coins instead of their native SLC token for providing voice data for AI training. You have IONET now that is also changing up their reward system. Now that they've turned up the revenue, they want to have more sustainable rewards, that they have more sustainable supply on the GPU side.
I think it is a necessary evolution of DePIN tokenomics. You know, if you look at the whole continuum of this just sector within crypto, the first question was, can we create the supply incentive to be able to bootstrap the network? The answer to that was very clearly yes. The next answer was, can we actually generate demand? We are seeing that now with many projects now that are hitting 7- and 8-figure ARRs. And so now the question becomes, well, how do we build the sustainable tokenomics? Because the big glaring problem within DePIN is that everything has just continued to sell off. And so I think that this is going to be a very big topic within the 2026 kind of meta is, what do DePIN networks do to be able to address this? You've got a sort of a multi-stage problem, which is you can't incentivize those early supply participants without having your own native token. I know you've talked about this a couple times. We talked about it on the happy hour, but you do need companies that are, oh, sorry, I'm just getting a phone call here. You do need companies that have this sort of supply token to be able to go out and create the network effect. But now we need to be able to address, how do we prevent the token from just dumping? And so it's going to require new models. Obviously, it does require getting sufficient demand to be able to have this transition point. But I think this is going to be something we see more and more. You know, I had an article that came out back in March that talked about an approach that sort of leverages that early token supply issuance that goes out, and then you transition to a way to continue using the token as a direct relationship to have value accrual, but where that value accrual comes into the network is done via stablecoin mechanism. So that's, I think, what we're going to start seeing more and more networks doing. You also don't have the one thing that's great about DePIN networks is that you're interfacing with customers who aren't crypto native, generally speaking, whether that's demand side customers or even a lot of your supply side participants. And so if it's untenable to be able to support that scale, to be able to have $100 million in revenue if you're always doing it with a liquid or sort of a variable token that has historically just gone down over time. So I think this is a great move. I'm very, very excited to see how it works out for Silencio. I think there's a few different ways that you can do it. Tashi's a project that I think has a interesting variation of this, which leverages more of a utility-based model where you can actually get rewards in a dollar-denominated mechanism. But it's a good thing for DePIN. It's a good thing for everybody involved, and I'm just excited to see how it plays out. Because if it does mean that Silencio can get additional people using their app that they can generate more revenue with, it makes a pretty strong argument for other projects to look at that and say, maybe this is something we consider utilizing in the future.
I agree. I agree with your little take there. To me, it's just great to see this transition that we're seeing. Whether it's Tashi with their tokenomics, obviously Helium going to open market buys, in Burns, we're seeing now HiveMapper doing the same thing. GeoNet and Rover have already been doing that. Now you've got IONET looking at stabilizing rewards based on the actual revenue coming through. Silencio with stable coin payouts. And you see here, like, this is the key though, right? 100 times more demand than supply. So we're seeing the exact opposite problem that we saw in the last market cycle in the early stages. Right. So to me, the most exciting part about all this is like, hey, the demand is there to your point, this is revenue coming from outside of the ecosystem, right? From customers that are actually utilizing real world products, whether it's buying data, whether it's using a network like GeoNet, or renting GPUs through some of these GPU aggregators. It's actual real money coming in from outside the space, as opposed to what we were seeing before, which was just, we're going to create a token out of thin air that we hope has value at some point and push that out to people. We don't know how much to give out. We're just going to give out a ton at the beginning to see if this works. And I think that's why we've seen such sell-offs, right? Now we see at least outside revenue coming in some way, shape, or form to support the token price.
Yeah.
And obviously we're seeing a little bit of a decoupling. I looking at the prices today, I can't say we're fully decoupled from the broader market at this point.
Yeah.
But I think we're starting to see some of those projects that are making a concerted effort to tie revenue to their token price. They're outperforming the rest, at least. And I'm curious, like, what do you think as the market rebounds? And I'm not going to ask you when, because we don't have a crystal ball here, but where do you think that we're going to see these projects that have made these changes, while the market's been down? Do you think they're going to just be, set apart from the rest and go absolutely ballistic? Like, what's your outlook there?
Yeah, I think the answer to that is absolutely yes. And I've shared kind of an initial draft with you, but one of the updates that I had made to this token valuation model I've been working on for about a year now is, looking at, you do have a few distinct categories of buyers within a network token. And again, there's the fundamental value that you could derive based on future revenue and kind of the outstanding supply, but there's also liquidity, which does drive quite a bit of the price action. And so, in DePIN tokens, you've got that somewhat structural imbalance between customers that are just getting these things ahead of demand and selling, and then you've got the open market buys, which at some point should be, in open market buys, I mean, from kind of the traders, not just the revenue that's coming in. And ideally, that should net to zero at some point between the buy-sell relationship. But in a bull market, when you've got a lot of euphoria, a lot of people that are excited about this, you'll see a higher amount of people buying rather than selling. And then when you couple that with the open market buys that are being generated from revenue, those two catalysts coupled together should create, in my opinion, outsized price appreciation, because now you've got two drivers that are increasing price based on liquidity, buys from revenue and then buys from just the market forever being excited. And so as a result of that, I would think you create a disproportionate amount of token value accrual within DePIN networks. Unfortunately, right now we've got the revenue driver, but we don't have for the open market buys, but we don't have that coming from just general speculators or traders or whatever. And so once those two happen in a bull market, if you will, my expectation is that should create quite a bit of additional upside for these DePIN tokens that have not been able to capture that narrative thus far.
I agree. I think also from the retail standpoint, yeah, they'll come back in. They're going to be looking for whatever the big narrative is, right? And that's just how it is with retail typically.
Yeah.
But I think these changes that are taking place, as with the regulatory environment opening up, we're going to have more TradFi coming in the space, most likely. I think that there's going to be an attraction to some of these projects now, knowing that, hey, there's an actual use case revenue. So I think it brings in a whole new buyer as crypto expands its reach and is taken a little bit more seriously. The other thing to think about here is, we're starting to see the effect of these open market buys. But if you look at the growth trajectory of all these projects we cover, the revenue is on a massive growth trajectory.
Right.
You also, on the other end, have pretty much all of them where emissions are now moving in, the direction where they're starting to drop pretty significantly on a lot of these more mature projects. So, I think that network effect is going to only get more pronounced, right?
Right.
As you have the revenue growth, like GeoNet, for example, went from 500,000 earlier this year on an annual trajectory to 7.2 million. Now projected to maybe hit between 16 to 18 million in 2026, as much as 40 million in 2027. You're seeing the same thing with some of these GPU projects. Helium, obviously, about to turn on Mexico, moving into Brazil. And then again, you look at the emissions, generally the emission scale tends to drop. Now, that's not going to be true of some of the early stage projects, that haven't had their token unlocks for employees and investors yet. But I think for some of these that are solidified, you couple that network effect that I think is only going to get more exaggerated. And then you have retail once things do turn around, and that new pool of buyers from TradFi. I think the stage is being set for things to really explode for some of these projects, at least.
Oh, without question. And, one of the big points of conversation is, you've had the debate between Santiago and Haseeb saying, well, what's the value of this? Are we looking at it from a DCF perspective? And you could argue that a lot of the L1s are incredibly overvalued. That's kind of Santiago's point. Or you could say, hey, a DCF is not the way to approach this. It's really about the total kind of economic value, and we still don't really know how large that can scale. And so as a result of that, there's this cloudiness or this gray area between what the valuation is. And so historically, the idea has been, well, the future opportunity for these L1s is going to be significant. They're going to eat the world. And so if you just say that that's your thesis for investing, the value accrual will follow. And we've I think transitioned a little bit in terms of the L1s are going to eventually eat part of the world, but you're not going to have the entire economic system in terms of absolutely everything be running on crypto rails to some degree, maybe at some point. But even still, within the DePIN community specifically, or sort of the DePIN sector, you don't have to make a speculative bet on where that future value accrual is going to come into. So my hope would be that as smart money starts re-entering the space, because they can see the fundamentals of these revenues are way more significant than even a lot of L1s, that's going to increase the buyer adoption, because you don't have to bet on where the economic value is going to come from. The economic value is already being created. So it makes it I think, a far more attractive investment opportunity, because you're not speculating. You're just assuming that they're going to keep going up and being successful. And if that's the metric by which value is denominated from, it makes it the most attractive buying opportunity moving forward. So I think that there's going to be a big buy opportunity in the future here for DePIN tokens, because they're really one of the few categories that can demonstrate increasing growth rates on revenue. And yes, you see that in L1s, but the disparity between the actual value that they're creating in terms of revenue and the price is significant. I mean, the PS ratio of even like
That's
Solana
crazy.
is like 400, or I think Avalanche is like a couple thousand, 2,000, and DePIN networks, you're at single digits at best. So I don't know. It makes it compelling for TradFi investors to want to buy these things.
So you're telling me that all of the financial rails in the entire world aren't going to go to XRP and push it to $10,000?
No, I would not bet on that. Although one of the other funny things about Breakpoint or announcements out of that is XRP is going to be on Solana now. I don't know the details of exactly what that entails or what that means, but it's there. I'm not a big XRP bull though, so I know that pisses a lot of people off. But
yeah, I know. I mean, who knows? You never know. What the other thing I want to point out though about DePIN too is that it's tied to and has a lot of overlap with a couple of sectors that are going to see absolutely massive growth. I mean, on one end you have AI, and a lot of it's around data collection, frankly, and that's one thing. As AI continues to grow and be trained, like, you need data, and that's one thing where you look at like something like 375 AI or Rover and the unique data they're collecting. And that new data set, I think that's going to be absolutely instrumental. And I think there's be a huge demand for that, because, these AI, when you're training AI, they can soak in all the information from all across the internet, but new data sets, fresh data sets, I think are going to be super valuable. The other is robotics, man. And like robotics is going to be the next sector that really blows up. And you've got Aoki, you've got GeoNet with overlap there, even like Tashi, right? And then Rover and HiveMapper with collecting data for self-driving vehicles, which is technically robotics space. So it'll be the first, $1 trillion robotics industry that the masses adopt. I think that type of overlap as people come into the space, it just adds more fuel to the fire. And to me, that's why I've been really I've consolidated plays, throughout the course of this year, and it really positioned myself to get into those sectors and find out where the overlap is with the teams that are really building and have, a path to actual revenue. Things that didn't matter a couple of years ago that I think will matter now, or at least I hope.
Yeah, you're spot on. And the other thing too is that this isn't hypothetical or sort of theoretical. You're hearing people like Elon Musk talk about this is the future. They're clearly making significant bets on robotics and sort of autonomous AI being the next evolution. And everybody understands at this point that the data is the thing that helps drive that. Tesla's got a big head start in terms of what they've been collecting from the cameras that are on their Tesla devices. But if you sort of extrapolate that thinking across all of these other use cases, DePIN's in a very unique position to be able to actually generate the data that would be responsible for training or sort of driving the robotics use cases moving forward. So I don't know how you collect that without this type of model, because right now all of the other data sources are either closed loop, and so maybe you've got like a Ring camera on your door, and Amazon could leverage that. I know Amazon's not super big into the AI model generation, but you need these novel approaches to be able to go out and capture that if you want to be able to compete. And if you look at what Nadix is doing, they're trying to hitch their wagon on the Tesla cameras, and they recognize that all of these other car manufacturers are at a significant disadvantage because Tesla dominates the world in that case. And so how do you get a foot in? I think the DePIN model is going to be the way to go in terms of getting that. 375 is a great example, as you alluded to. Silencio is even in that category with getting data for AI training. But most of that data is offline, and it's not fresh and not currently generated. So, or it's not live data, which is what DePIN solves. So that's going to be, if you believe in AI and robotics, DePIN is going to be a core component to that long-term viability and success.
Agreed. And I'll just say with Silencio on it, by the way, anyone that's watching, make sure to share, retweet, subscribe to Unleashing DePIN, subscribe to Tyler if you haven't already. If you're watching him on his channel and watching me, subscribe to mine too. And yeah, just make sure to give us some love here, because it is recorded. People can watch it after the fact. We have a space coming up, though. I want to pull that up on Tuesday with Silencio. So that'll be pretty exciting. We're going to be able to ask them questions about some of these recent moves. Let me pull the details up here. So it will be, let me share my screen again. Boom. Pull this up. It'll be on Tuesday with their CEO. So I have to give some serious kudos to them, man. You've got to be able to pivot and find solid product market fit. They went into the project collecting noise pollution data, which is valuable, but they also realized, hey, there's more that we can do here, and that's you have to realize all these are really startups, and I think the community sometimes forgets that, or probably haven't worked in the startup space, but not everything's going to go perfectly, and finding product market fit, like, you've got to be agile, man. You got to be able to make changes when it's necessary and change the way you're steering the ship. And they've done a really good job here to the point where they found some significant demand. So really excited to have them on. So highly encourage you guys to join in on Tuesday, and we'll be asking him some questions and kind of digging in deep with the founders. Always fun to do.
Yeah, there's nothing better than getting to ask him live. And I'm excited to hear about where this demand is coming from. Just, knowing what they've gone through with this strategic pivot. I think the other thing too is that you can look at what's going on with Silencio and use that as is kind of a proxy for these other data collection networks like 375, right? Like the interesting thing about Silencio is, to your point, they realized that the value, the data that they were collecting has value. It just wasn't valuable in the case that they were initially trying to go after, which was the noise pollution side. And so like in the 375 case, Harry has demonstrated very clearly his ability to monetize and create value from these data sets. And so if Silencio is able to find outsized demand, projects like 375 are going to be absolutely well positioned to follow suit in different verticals, different industries. And so, I think if you're looking at how do I place some bets, you could use that as a pretty good proxy to extrapolate that to other theses for these networks that are doing similar but different things.
Absolutely. Man, we're coming up on an hour, a little bit over an hour here. So, this is a great discussion, man. Okay. Well, give us a couple of projects, DePIN projects you're super excited about that, in this recent dip, you've been looking to add to and think can do well as the market rebounds.
So my buys are probably the same as your buys. A lot of the recommendations that you've been sharing are ones that I'm equally as excited about, and I'm currently buying. Which 375 is probably at the top of that list. I think you've got one of the. I mean, again, going back to the use case, the opportunity, it's everything that we've just been talking about, led by arguably the best team in DePIN, if not all of Web3. Which I think is really compelling. GeoNet's right there. I think any project that's in intercognitive is one that's worth looking at. So that includes Alki, that includes GeoNet, that includes Rover. These guys are seeing the revenue upticks. Still excited about Helium. They've clearly demonstrated that they will do whatever it takes to make the network successful, whether that's taking 100% of revenue and buying it, continually expanding. So I'm excited there as well. But there's a couple other projects that haven't had TGEs that I think are interesting to look at. One of them is called Decent Space. So they're sort of taking underutilized ground station ground stations for non-terrestrial networks. So like satellites, a lot of things that Elon's doing with SpaceX. I've had a chance to chat with their founder a few different times. He's really smart. They don't have a token yet, but that's a project that I think is interesting to look at because it's quite outside of the different network or verticals that we've seen within DePIN. And if you believe that these satellite networks are going to continue to grow in value, what they're doing is very interesting. So that's one that's maybe a little under the radar that would be worth taking an additional look at. No token right now, but smart founder. And
this one right here?
That's the one.
Hey, they just got a new follower from me. Tyler sharing the alpha out here.
I gotta give credit to DePIN Nomad. He posted about them maybe 3 or 4 months ago, and so I instantly reached out to their founder Tristan and learned a bit about what they're doing. I've had quite a few different conversations, but he's a smart team, comes from the satellite space indirectly. And, again, if you believe that things like Starlink are going to dominate a lot of the connectivity in the future, which I think is a good thing to bet on, they've got an interesting solution to kind of increasing that ground network for those satellites.
Okay. All right. You threw some good ones. I mean, all the other ones you covered are all the ones that are my biggest holdings now. So we have some similar holdings. I'll tell you what, do you have any other ones you wanted to share or no?
I just had a conversation with Nate from Deep Network. They've got some interesting things that are coming. They've been, building in the back end from ensuring that their network can take all of the workloads that they've been running from their NAS and actually have them on their distributed hardware network. But a couple of the things that he said in our conversation, which we'll be sharing soon, made me increasingly optimistic about their ability to create value and sort of generate revenue from an opportunity that I think is somewhat in the zeitgeist with respect to these decentralized compute networks, but it's done in a way that's different and going to be highly compelling to Web 2 customers. So I'm excited to see how they execute on that, but it was an interesting learning that I had, and I'll be able to share that soon so that we can we can get that information out to folks. But that was something that I hadn't heard before, and I'm excited to see what they do there.
All right, sharing some more alpha. I know you are a big USD.ai fan as well, and what they're doing.
USDAI is another one that's at the top of my list. I think, we talked a little bit about trends that are going on in DePIN within 2026, where the stablecoin or sort of these revised tokenomic models are going to be a part of it. I think the other huge catalyst or just growth opportunity in DePIN for next year is going to be the intersection of DeFi and DePIN. So USDAI is easily at the top of that list. The other one that's at the top of that list is Fractals. So Big Sean, he was initially at XNet. They're really positioning themselves to create a, kind of the new financial DeFi DePIN, because I've always thought DeFi was really interesting, but the problem is DeFi historically has just been a crypto only solution, or kind of a crypto only thing. And so as you can bridge the benefits of DeFi with kind of that real world utility or just value that's generated from these infrastructure networks, I think that becomes really compelling, both from what you can do on these novel financialization methods, but also just for increasing adoption, because anybody that's gone and tried to deploy these devices, that it's non-trivial, or it's just a lot of work. And so having that exposure has, I think, big ramifications for the adoption of the space.
I 100% agree. And it was really, so right now they partner with XNet so far, GeoNet, and Helium. They have more coming. And I thought it was pretty wild, because we had a space with them on about a month ago, maybe a few weeks ago. And they're working directly with Solana Foundation. So that's pretty freaking awesome, man. They're getting a lot of traction there. I think there's a huge opportunity here. So 100% agree. The other one, of course, that you mentioned, USD.ai. So give both those a follow, Fractals and USD.ai. You've covered all the ones I would cover. The only other one I would make mention of here is Ex Machina. They're doing something very interesting in the robotics space, essentially allowing people to pool capital to get into some of these investments that you probably wouldn't be able to otherwise. And you can take a look at their treasury so far. They've got a $800,000 stake now in 1X. You see a 1.2 million in Eptronic. They had some preferred shares already, 450,000 in Eptronic, which is already more than doubled in value. They've got a pretty large stake in Figure. So they are pooling capital. They're then putting it into investments in early stages in some of the robotics companies that are likely going to be some of the biggest robotics companies in our life, which is freaking wild. And we're on the front end of this big move. In my opinion, I think the robotics scene is going to be absolutely massive. These are going to be names that everyone knows. I mean, they might not know them yet, but I think all these companies are going to be names that everyone knows. They're going to be household names here in the not too distant future. And I think getting in this early on some of these investments will pay off quite well. And of course, it is all a DAO, right? So all of it's voted on. Any investment they make has to have majority vote in favor of it. They had one recently that actually got shot down. They most recently voted in favor of getting ready for their TGE. So it's the Deus token. So I'm really excited to see where that goes. And I think this is a really solid project. And for people that are looking to get exposure to the robotic space and maybe not overly in the crypto side of things, I think this kind of does a good job of merging both.
Yeah, and I've also been really impressed. I know we talked about this a little bit on the DePIN Happy Hour last week, but I've been really impressed at their ability to execute, because they are doing things that there's a few different, call it, risks involved, which is managing the DAO structure just generally has historically been a challenge. And then the other thing is being able to actually get in front of these different companies to participate in their investment rounds. And so given the fact that within 9 months, I think I had I think I did a podcast with them back in March, that they've been able to do both fairly significantly. I mean, $30 million is not nothing, right? And so the fact that they've been able to do it, and they're going to be able to continue to do it, creates a really unique opportunity for for investors that otherwise would have no chance of getting access to these funding rounds. So I agree. I think they're doing the right things. And are you going to be chatting with the Ex Machina folks at any point in the future to learn more, Brad?
Indeed. We're narrowing it down. We're looking at Thursday or Friday to have that discussion. So I know you've had them on already before. By the way, we got to get Tyler back in the founder interview game, man. You have such good interviews. I know you've been busy with the job, but we got to get you back in there, man. Because I gotta say, out of all the people in the DePIN space, man, you're quite talented with the interviews, man. You've done a lot of great work there, and I've listened to all of them, I think, at this point, and learned something new every single time, man. So.
Well, I appreciate it. It was definitely a great way to help be a part of kind of this evolution within DePIN. It was also selfishly beneficial to be able to learn firsthand. But we've got some new episodes coming, some exciting conversations that I'm looking forward to getting out in the world, because I do miss having those in-depth conversations, and I like to think that I can share a little bit of value with the community. So I appreciate the kind words, and hopefully we'll get back to doing more very, very soon.
Heck yeah, man. Well, I'll say this is a great discussion. We got to do more of these, man. We got to make this like a regular thing, because I think we covered some ground and covered some really valuable information today. Do you have any final thoughts on DePIN, or for people that are looking at the space right now?
Oh man, no, this has been an awesome conversation. I appreciate you having me on, getting a chance to chat. I would say that if you're in DePIN right now and you're trying to just look at where the trends are going, or kind of where the new changes might be for some of the projects that we talked about on the tokenomics side, like Silencio, like IONET, I think those are ones that are worth watching for either informing how things may change in the future, or if there's just sectors within the broader space that you're excited about, like AI, like, some of these data monetization plays. Definitely look at the projects that are leading the trend or leading the charge in those verticals, because I think there's going to be some big catalysts happening within the next 6 or so months that will pleasantly surprise you based on what we're hearing. So keep an eye on them, man.
Hell yeah, man. I think the macro environment could flip. Hopefully we get Hassett in there and we turn into an expansionary period. The ISM needs to tick back above 50. I think we can get there. It's been in a multi-year downtrend for the first time that I can see in the charts, at least. So I think we're ready. And the other thing I'll leave you with is this. We got the co-founder of Solana Foundation bull posting DePIN. I mean, come on, guys. I know everyone thinks it's all over, but generally when everyone thinks it's over, that's when it's not over. When everyone thinks one thing, the smart money is normally positioning. And I think that we have brighter times ahead. With all that said, Tyler, appreciate you, man. That was freaking awesome. We'll get you back on soon. I don't know. We'll talk offline to see how often we can make this happen.
I love it. Let's do it, man. Well, thanks for having me. Thanks,
no
everyone.
Doubt. And everyone else, enjoy the rest of your Sunday. Make sure to like, subscribe, and we'll see you all next time. Peace.